Hello everybody, this is Lara at Elliott Wave Gold and Elliott Wave Stock Market with a Bitcoin update for you. I'm going to look at Bitcoin, Ethereum, Nano and OMG. Nano and OMG are new, they're on my list that you helped me with. I'm sorry, I have to apologise for the sound. It's raining, but this is Bocas del Toro, Panama, and it could rain all day. So I really wanted to get this done for you. I did actually record this on Friday and want to upload it on Friday, but I had a software malfunction and the audio wasn't captured. So I'm doing it again. Yay! So here we are. So the question for Bitcoin is the low in? And the answer, I think, is no. How low is it going to go? Let's have a look. First of all, let's have a look within cycle wave 1, which ended in December 2017. 1, 2, 3, 4, 5. Within this, let's have a look at how long each of these primary degree corrections last. Primary 2 lasted 5 months. It was a 94% correction of primary 1. This is on a semi-log scale. If we put it on an arithmetic scale, you can see just how extreme this market is. So we have to view these longer term charts on a semi-log scale. Primary wave 4 lasted 21 months to primary 2's 5 months, but primary 4 was a triangle and they do tend to be longer lasting structures. The first and deepest wave within it of intermediate A lasted just 3 months. It was a 91% reduction in market value of primary wave 3. So what are we looking for here? Primary wave 2 lasted 37 weeks. Primary 4 so far has lasted 14, so I would expect it to be longer lasting. May or may not be deeper though. It could just move sideways from here. I've drawn this channel on the weekly chart. My weekly chart is on a semi-log scale. I've drawn it from 1 to 3 with a copy on 2. If primary 4 is deeper or longer lasting, I'd expect it to find support at the lower edge of that channel, but let's look at it on a daily chart. I'm just going to condense this up. This daily chart is on, I'm just going to check, this is on an arithmetic scale. When we draw the same channel on an arithmetic scale, we have to pull the lower edge down to sit on these lows down here, and we find that it's been around about where primary 4 has been finding support, but not quite. So if primary 4 breaks below the channel when it's drawn on an arithmetic scale, I really do hope you can hear me over this rain. It's just excessive. But it is what it is, and I can't stop the rain. If it breaks through the channel on the arithmetic scale, then I'd look for it to find support at the channel drawn on a semi-log scale. So you have to draw the channel at the daily chart level on both scales and keep an eye on both. It's not perfectly finding support at the lower edge of this channel. The last 3 days it's broken through and it looks like a little back test of resistance possibly maybe going on here. So what structure is primary wave 4? Well, first of all, you could see a zigzag complete down here, and I'm going to have an alternate looking at that idea, or this could be intermediate A of a zigzag for primary 4. Intermediate B could be unfolding as an expanded flat. A, B, C, and C to move beyond the end of A at 41295.27 to avoid a truncation and a very rare running flat. Minor B may be a triangle, a running contracting triangle. Let's just move. I'm going to put the BD trend line here so that it sits on the high of this candlestick, because Elliott wave triangles will often have tests of their trend lines, and those trend lines are usually expected quite strictly. The final subwave of E will most commonly undershoot the AC trend line. If it doesn't end there, sometimes it will overshoot the AC trend line by a little bit. So let's see if this continues as a triangle. I have an alternate for you for Bitcoin. What if it's unfolding as a double zigzag? Now this would give it no alternation, well, very little alternation with the single zigzag of primary wave 2, but let's consider all possibilities. So this is an alternate. It has a lower probability based on Elliott wave structure, based on that guideline of alternation between 2 and 4. If primary 4 is unfolding as a double zigzag, we could have the first zigzag complete down here for intermediate W, intermediate X could be complete, and intermediate Y could continue lower. And yay, we've got thunder and lightning as well. Joy. Okay. It's probably not going to ease up for hours. It rains so much here. It's absolutely astounding. So I really hope you can hear me. Okay, I'm going to do another alternate though, because I want to consider what if primary 4 is going to be a triangle. I'm going to start with this one. I'm going to call it daily alternate 2. I'm going to delete this, but not the child waves. Let's get rid of that. Let's look at, because if it's a triangle, those trend lines could be supported. No. Okay, let's pull this off, pull this off, pull this off, and over. So we could have a single zigzag complete down here for intermediate A, and then we could have B, C, D, E. No. I'm going to just squish this up a little bit so we can see how the triangle might look if this trend line is mostly respected. And let's put the triangle trend lines in, because again, Elliott wave triangles, their trend lines are usually strictly adhered to. Okay, I'm going to get rid of this channel because that's not helpful. And I'll get rid of this channel. Okay, so if we have a zigzag over there for intermediate A, then intermediate C may not move beyond the end of A, 28,893.621. So that's the point below which the triangle would be invalidated. So sideways movement in a huge range for possibly months. That's entirely possible for primary wave 4. Within a triangle, intermediate B could move beyond the start of intermediate A. We could see a new all-time high for Bitcoin, and it could still be part of a triangle if it's a running triangle. If it's a running triangle, then we need to be alert for the possibility of a running barrier triangle where D ends about the same level as B and the BD trend line looks essentially flat. Because of barrier triangles, the most common type of barrier triangle I've found in my research is a running barrier triangle. So that's another alternate. So I've got 3 different possible structures for primary 4. It's absolutely impossible for me to tell you at this stage which structure will be unfolding. There are more than 23 possible structures it can be. All I can say right now is it's most likely incomplete. Let's have a quick look at some classic technical analysis for Bitcoin. Here's the weekly chart. At this low here, we've got a hammer candlestick pattern. It's a downward week with a lower low and a lower high, but the candlestick's closed red. But this is downward movement. Volume is actively pushing price lower on that hammer. And now we've got a couple more downward weeks coming with light and declining volume. Price is falling of its own weight, which is a shorthand way of saying price is falling due to lack of activity from buyers rather than activity from sellers. And price can continue to fall quite a long way and quite quickly on light and declining volume. Support about 28,800, resistance about 42,500. So it's consolidating with declining volume. On balance, volume is consolidating. This is a pretty good range. This support line, 3 tests now. The upper resistance line though, 4 tests and not too great a slope and reasonably long held now. If we see a breakout of this range from on balance volume, it may break out prior to price, which would give us a strong indication of the breakout direction for price to come. Or if it breaks out with price, then it would give us confirmation of the breakout from price either way. RSI is neutral after exhibiting triple bearish divergence at these highs. There's plenty of room for price to keep falling before RSI reaches oversold. ADX reached very extreme, above 70 for the prior upward trend. This market can sustain very extreme trends while price travels an extreme distance. It's a highly volatile, extreme market. It's declining now. The negative DX line has crossed above the positive, indicating a potential trend change to down. But at the weekly chart level, this is a lagging indicator. It's based on a 14-week average. And there's only just now been 13 weeks of action, price action, falling from this all-time high for Bitcoin. So ADX isn't necessarily catching up yet. It needs to come down a little bit further to get below both DX lines to be in a position where it's going to indicate a new trend for us. It's not there yet. ATR is declining as price moves sideways now, indicating some weakness as price consolidates, and stochastics is oversold. At the daily chart level for Bitcoin, resistance 42,500, support 30,000. Price is moving sideways with light volume, so it's consolidating. On balance, volume has a tight range. A breakout from this should come soon and should indicate the next direction for price for the short to mid-term. ADX is indicating a downward trend, which is already extreme. It's already above both DX lines. This downward movement, or deep pullback, whatever you want to call it, this downward bear market here, hasn't been long enough yet to pull ADX down below both directional lines for it to be in a position to indicate a new strong trend. That's not the situation here. RSI is in neutral territory. There's plenty of room for price to fall. It did indicate single bullish divergence at these lows, so it's unsurprising we're getting some sideways movement, and we may actually get some upward movement following that single bullish divergence, and that the outline of what that could look like might look like that triangle, that Elliott wave triangle I just went through with you on the daily chart in the Elliott wave analysis. Stochastics is oversold, but ADX is indicating a trend, so we use RSI, not stochastics, in a trending market. ATR declining as price moves sideways. Okay, let's move on to the next market. We've got four to get through today. Let's look at Ethereum. Weekly chart. Let's squish this up and have a quick look at Ethereum's previous. I'm only looking at Ethereum because this is one, and Bitcoin currently, because they are two major cryptocurrencies which I'm also invested in a little. Cycle wave 1, cycle 2, cycle 3 unfolding. Let's expand cycle 3 out. Cycle 3 has now moved beyond the end of 1. Cycle 1 has a high at 1422.86. This is back in January 2018. Cycle 3 so far has moved beyond the end of 1. It's now reached 4362.35 up at this high, and now it's consolidating. Primary wave 2 on the weekly chart lasted 37 weeks. It subdivides as a zigzag. Primary wave 4, I would expect it to not be over here. That's only 6 weeks. It should be longer lasting. And I'm going to consider a triangle here for Ethereum. And so this is what that would look like. Now I may need to relabel this. There are more than 23 possible structures that primary wave 4 may unfold as, but so far it is respecting the lower edge of this channel. Again, this is a semi-log scale on the weekly chart. On the daily chart, yes, it's an arithmetic scale. The channel sits quite differently, and so far for Ethereum it is being respected. So let's consider the possibility of a triangle for Ethereum. And again, a triangle could see wave B move beyond the start of A, as in a running, contracting or running barrier triangle. I'm not going to consider an expanding triangle because in my experience over 13 years of doing this every day now, and my research with a full wave count on as much data as I can for several markets down to the daily chart level over decades, I have never actually seen an expanding triangle which I can be confident of in hindsight. It always fits better with a B wave as an expanded flat in there. That's how I prefer to see those movements, and it just has a better fit. So I'm not going to consider expanding triangles unless they show themselves to be true. Let's have a quick look at Ethereum's classic technical analysis with the weekly chart first. At this high, we see bearish divergence between price and RSI, after RSI reached extremely overbought. We could even possibly say there may be weak double bearish divergence, but I'm just going to count this one, and it's still reasonably weak. But so after that, unsurprising, we got some downward movement. Now here's a little trick that I think I'm figuring out with RSI. You have to wait for the peaks in price to form before you look for that divergence. If you looked for divergence on this week here, you would have seen strong divergence. But then it just continues higher for another week of vertical upward movement and a huge movement in price. This is a semi-log scale, so the price movement on this week is much more than on this week and these prior weeks because of the scale on this chart. So you need to wait for the peak to form. Here is a peak, here is a peak, and when the peak's formed, then look to see if there is divergence. If you try and anticipate divergence before it happens, it very often will simply disappear and be followed by a strong movement in price in the same direction. So that's how I think it's the best way to look for divergence between price and RSI. On-balance volume has a really tight range, and it will see a breakout pretty soon. The resistance line doesn't really have good technical significance, so an upward breakout wouldn't be a strong bullish signal. A downward breakout, however, would be a reasonable signal from on-balance volume because this trend line is long held. It has multiple tests, 4 or 5 tests, depending on whether or not you count this as a test, possibly not. And it's close enough to horizontal. Those are the 3 aspects that give a trend line its level of technical significance. Length held, tests made, slope. A shallower a slope or a horizontal line has a stronger technical significance. So we're going to see a breakout of this really soon. That may precede a direction for price because price is now consolidating in a sideways range. RSI is neutral. There's plenty of room for downward movement to continue. ADX is still declining after reaching very extreme above 60 and above both DX lines. It's now indicating no clear trend at this time frame. Stochastics is oversold, but even in no trend, it can remain oversold for a few weeks before it moves up. It's only just dipped into oversold. So we could see a little bit more downward or sideways movement before the swing is ready to end. What about the daily chart level, the shorter term picture? At this high, a strong bearish engulfing candlestick pattern for Ethereum with a long upper wick, and it had some support from volume compared to the prior 2 weeks. Price is consolidating with resistance about 2400, support about 1700. At this low here, we have a bullish candlestick pattern. At this high here, we have a bearish candlestick pattern in an evening doji star. Price hasn't quite reached support. ADX though is now indicating a downward trend, so we don't use stochastics, we use RSI. RSI is not oversold, so there is further room for this downward trend to continue. But for confidence in a real downward trend, not just a downward swing within a consolidation, we would want to see a break below support on a day or week, closing below support, below this 1700 point. And ATR is declining as price moves sideways. That's normal behaviour for a consolidating market. So this all fits with the Elliott wave counter, seeing a big triangle unfolding. That is entirely possible, although I may need to relabel that as the structure continues. Okay, let's now get into Nano real quick. I did already go through this wave count. I created it with you while I recorded it, and the audio failed. So I've already done this one. So let's have a really quick look. I had a look in here. The third wave subdivides okay. So for Nano, from this low here, under 1 cent, to this high here, $37.62, just above, we can see a nice 1, 2, 3, 4, 5 wave impulse. I've checked all the subdivisions in here. It does have reasonable looking Elliott wave structures. I have not spent time on cycle wave 2 because I wanted to get into this movement up here. Let's squish this up so you can see what I've already done. I've looked at this. This is absolutely fine. The third wave subdivides well. This was a bit tricky, but I did figure it out. And the question for primary wave 4. And this is where I ended it. I don't know what structure is going to be unfolding here, but if we look at the proportion between primary 2 and 4. Primary 2 lasted 149 days. There's the high for primary 1, and I have primary 2 as some kind of either expanded flat or a combination. Primary 4, I'm not sure about the structure, and I'm not sure if it's over for Nano either. It could continue lower, and here's the invalidation point. Either $1.313721 or possibly up here, $1.44. So all of these cryptocurrencies, I have them in a primary degree fourth wave, which is possibly incomplete. Nano is not one of the cryptocurrencies that Stock Charts has data on, so I can't use that, sadly, for my technical analysis. So I've done a quick look at some of the indicators I use here in volume. Let's view the crosshairs so we can see what we're looking at. At this high here, oh no, actually quickly before we go back to that, I just want to show you why I'm the basic Elliott wave structure, and let's look at this. A simple 5-wave impulse. 1, 2, 3, 4, 5. These are the core Elliott wave rules for this structure. 2 may not move beyond the start of 1. 3 must move beyond the end of 1. And 4, this is the really important rule we're using here, 4 may not overlap wave 1 price territory. And for these cryptocurrencies, this is a slightly unusual example in that 4 does come somewhat close to 1. 4 is 20 cents and 1 is 16 cents, so it got right down there. But this is more normal behavior, particularly in a fifth wave or a third wave. 4 is well above wave 1 price territory. For these markets, they're so extreme, the volatility is so high, 4 doesn't usually get close to 1. So remember those rules. 1, 2, 3 must move beyond the end of 1, and then 4 must unfold and will probably remain well above wave 1 price territory. That means if you buy within wave 1 price territory, you can hold throughout 3 and 4 and 5. And now this is why I'm so keen on 5. Look at the length of these. 1, 16 cents in length. 3, $3.95 in length. 5, $35.99 in length. The fifth wave is the longest and strongest for these markets and typical of commodities. These markets behave like extreme commodities. So right now, the price for Nano at $3.90, just under $3.94, is actually really attractive considering if this model proves to be correct, where I expect it may go. And so that means I can have a really small investment, just, I don't know, maybe chuck $100 or $200 or something dollars at it, not much at all, and just hang on for a few years. That's the general idea. I'm not going to be investing large amounts of money in this because it could possibly fail, but I'm going to be investing money I can absolutely afford to completely lose, and I will lose no sleep about. I'll be, oh well, I tried, it failed, moving on. So that's what I'm doing with a few of these. Okay, so at this high, a bearish long upper wick and a volume spike, a huge volume spike here, a blow off top. Interestingly, blow off tops aren't usually the end of the movement. That name blow off top makes you think that's the final high and it's not going to move back up to that point for a long time, if ever. Actually, they tend to be followed by some consolidation and then the final high, which exhibits weaker volume. So you've got a higher high, lighter volume. You've also got strong bearish divergence between price and RSI. And now price is falling. We've got support around about $3.70, just a little bit above $3.70. Resistance around about $5.60. RSI hasn't reached oversold. ADX is indicating there's a downward trend, but the trend's got a long way to go before it comes extreme. So if price can fall below this support, next support looks like it's about $2.20. On balance volume, well, this is why I prefer stock charts, because everything's so squished up here on my indicators on motive wave. it's just really difficult to draw those trend lines around it. So I'm not going to try and do that. And ATR is declining. So that's all the technical analysis I'm going to do for Nano. And I still think that this is potentially quite a good price for a buy. And I don't care if it falls quite a bit more. I'm just going to look at this for a very long-term possibility for a very small outlay. Very small. Okay, OMG is another one. Let's have a look and let's do an analysis of this together. So this is going to be the bit that makes the video quite long. First of all, I need to view this on a semi-log scale. Let's expand this out on the weekly chart. And let's start to get some labels in here. So we're going to start off to the left of the chart. I have cycle 1 possibly over here. Let's get rid of this across here now. Cycle 2 possibly over here. Okay, what's this low? 0.337, and this low 0.31. Yep, so this low is higher, so it didn't make a new low. What a huge retracement, nearly 100%. That's very extreme. Okay, let's expand this out and have a quick look at cycle wave 1. Where did it go? Let's put some labels in here at primary degree, because I think I know how I want to label this. I want to label this 1, 2. So beginning off to the left of the chart. 3, 4, 5. I don't think there's going to be any problem with how that third wave subdivides on lower time frames. And if there is, there probably wasn't sufficient volume way back in those early days for this to exhibit good Elliott wave structures. Let's quickly put some labels in for cycle 2. I think this looks like a double zigzag. Yeah, I think this is a fairly good looking zigzag. No, let's put that here. And this is a fairly good looking zigzag. I'm not going to waste time on the subdivisions of that, because the question we want to ask is whereabouts within cycle 3 is it? And there's a lot of overlapping here, so let's consider a diagonal for primary wave 1. Although this doesn't really look like a diagonal, but let's look at that first. No, that's invalid. This would be a contracting diagonal because 4 is shorter than 2, but 3 is longer than 1 and 5 is longer than 3, so no, that doesn't work. So 3 is longer than 1, 5 is longer than 3, 4 is longer than 2. Put the trend lines in, and it's a bit extreme, but it meets all rules. It doesn't look too bad. If that's correct, then following a leading diagonal in a first wave position, the second wave is normally very deep. Let's have a look at this on the daily chart. And look at these subdivisions. That's just... oh yeah, okay, I need to look at it on a semi-log scale. That's slightly better. Looks a bit more normal, doesn't it? I'm going to try an alternate on this. And let's delete this and see if we can get an impulse working in here for primary wave 1. Yeah, well, see, that doesn't work, motive wave, because you've got an overlap there. That's unacceptable. So put the 3 up here. I don't think this is going to work, though. I think it has to be a diagonal. I don't know, let's see. The key to your wave count is, does the middle of the third wave work? Oh, actually, it may. work quite nicely. Yeah. Well. Okay, so I'm going to pull this up here. And this up here. A really quick, short little fourth wave. Yeah, that looks pretty good. 4 looks like a zigzag. I won't worry about the subdivisions of that because I want to check the rest of this third wave. Is this going to work? Well, it doesn't look very good, does it? Let's try an impulse first. And I would want to put the third wave here. Oh, no. Which means the fourth is going to overlap the first, so that's invalid. And I wouldn't want to put that first. This looks like such a good 5-wave impulse. Why are you doing that, motive wave? Put it there. There you go. That looks so good. Okay, so the third wave can't be over there. What if it was over here? Is this going to work? Again, no. Oh, that's terrible. Or is it? $3.84, and what's the slow? Oh, okay. Yes. Goodness, it does work. Okay. Well, that actually works quite nicely. Let's have a look at this. Check the middle of it does work. Yep. 1, 2, 1, 2, 3, 4. Can you put this here? Yes. And then the fifth wave. Yeah. And now the third wave. No, here, motive wave. That looks really good. And I want that here. No overlap, good. Okay, this looks like a really obvious 3, doesn't it? So the 5s are subdividing as 5s and the 3s are subdividing as 3s. So this one looks like it's got enough volume for reasonable looking Elliott wave structures at this stage. There's going to be a huge overlap there. It looks like this fifth wave may be a diagonal. I'm happier with a smaller diagonal in this position than the whole thing being a diagonal. Okay, so what's the point of this exercise? Well, if it's a different structure, you can expect a different result following it. If it's a diagonal, and I'm talking about the larger structure of primary wave 1, not this little bit here. Okay, that's fine. Okay, so if primary wave 1 does subdivide as an impulse, then you don't necessarily expect an enormously deep primary wave 2. But if primary 1 was a leading diagonal, then you would expect a very deep primary wave 2. So that's the point, and that's the difference. And it's good to see that it will subdivide with 5s as 5s and 3s as 3s. So for this one, I think this one's in primary wave 2, not primary 4. So it's earlier on. So the invalidation point is way down here. What is this low? Where did primary 2 start? 33,7152 points. Sorry, cents. I think primary 2 is probably an incomplete double zigzag. The only structure it can't subdivide as is a triangle. And it looks like so far there's a single zigzag over it this low, but I don't think it's lasted long enough and moved deep enough. I think this one's got further to go down. So I think I'll just keep an eye on this one. I don't think I'll purchase anything yet. I'm expecting this one to fall further. What does classic technical analysis say? At the weekly chart level, there was pretty strong, clear bearish divergence at this major high, so it's unsurprising this price is falling for OMG. Resistance about $4.25, support about $2.25 is a little bit below. If it can break through that, there's strong support at $1. Volume's declining as price falls. It's falling of its own weight, or rather lack of activity of buyers rather than activity from sellers. On balance, volume has a pretty tight range, but particularly this resistance line does not have good technical significance. So a breakout here would be a weak signal. I wouldn't give it much weight. RSI is neutral and ADX is declining, so there's plenty of room for price to fall, but there's no clear trend. Stochastics is oversold, but it can reach oversold and remain for quite a long time while price falls quite a considerable distance, and it hasn't been oversold for very long. So back here, stochastics reaches oversold about here, and look how far price falls after that and how long stochastics remains oversold, and then it exhibits this bullish divergence between these swing lows here and here, which I haven't noted, but I should. So considering past behaviour, there's plenty of room for price to fall for this one. What about the short-term picture at the daily chart level? The moving average situation is bearish, but not fully so, because the 200-day moving average still has a positive slope. But price is below all averages, and the mids cross below the long and a death cross, so this is overall bearish. Volume's really light and declining as price moves sideways. Resistance about $5.30, support about $2.95. When we see a breakout, we'll see if it has support from volume for an upward breakout, then next resistance about $7.30. On balance, volume at the daily chart level has a tight range with a bit more technical significance than the range on the weekly chart, so watch this one for a breakout. It may precede a breakout in price, or it may confirm a breakout in price, adding confidence. ADX indicates a downward trend, which is not extreme. There's plenty of room to go before this trend could become extreme, but ATR is declining, so there's some weakness, and price is essentially moving sideways now. But if we have a downward trend, then there's still room to go before RSI reaches oversold. Look for support about $2.95. So I'll watch this one. There is plenty of room for price to continue lower, and my Elliott wave count expects that it probably will continue quite a bit lower. And that view does have some support from classic technical analysis. Okay, that's where I leave this video, which is now far too long. And those are the next two that I think I'll be having a look at purchasing. I'll definitely chuck a little bit of money at Nano, but not OMG yet. I'll keep an eye on that one. Thank you so much for watching, and if you're not already subscribed yet, do so. I am, for those of you who do watch to the end of these videos, I'll just let you know now, I am planning on working out how I can provide Bitcoin analysis once a week for you. I'm working on reorganizing one of the products I offer as a paid membership to include Bitcoin once a week, and I would also, if I can do that, manage that in my workload, I'm also looking at including as an extra free offering once a week analysis of another cryptocurrency for my membership. So as I work that out, I'll let you know how that's going to work. Thank you so much for watching.